Hello and happy Saturday, August 22nd, as we head into this weekend update. And man, do we have a lot to talk about. So you're going to want to stick with me. I have removed some of the single stock instruments that we talk about. If you want those levels are still the same. Watch my previous videos on YouTube because what I want to talk about is the indices and metals. And yes, we're bringing back crypto because as I get into the catalyst this week, um, you're going to know why I'm going to specifically, hard for me to say, talk about them. But as usual, I am a certified research analyst. These are my views and my trade entries and things that I'm looking for and key levels to buy and sell. I want you to do your own due diligence because trading has financial risk. I want you to learn what I do. I want you to ask questions and see for yourself if you can do it as well. I'm a resource for you. So let's get into our accounts. And you can see my background's a little different this week. Bitcoin and gold running bullish, and I want to talk about that. So um, this past week, the five most important catalysts that I saw was we had the biggest one, guys, was the spike in the long-dated U.S. Treasury yields. The 30-year yield reached levels not seen since 2007, around 5.3%, driven by inflation worries, fiscal concerns, and debt dynamics. This pressured equities, especially tech and growth stocks, via higher discount rates and competition from the bonds market. The U.S. Treasury bond buyback announcement, Scott Bessent, who is the U.S. Uh, Treasury Secretary midweek, surprise plans to double and potentially further expand long-dated bond repurchases, temporarily easing yields and supported the risk assets like uh, gold and crypto, which weakens the dollar. Remember, a weaker dollar, stronger gold, and provided major boost to, like I said, gold and silver, and as a fiscal liquidity signal. Geopolitical tensions since the end of February are still there. These drove oil prices, WTI and Brent crude, up another 6% this week. How's that feeling at the pump, guys? Is there a lot of winning? No new wars, lower gas prices, gas below $2. He hasn't done a thing he promised to do, has he? Um, that has reignited inflation fears with oil driving up and weighed on the stocks while supporting safe haven demands in precious metals. So oil, these fears, and then the bond buyback and the long dated treasury yields is really a strong catalyst. And that weaker U.S. dollar, guys, is all in that, and that's driving that. This coming week, the most important things I see, I mean, we have Nvidia earnings. Everybody watches Nvidia because it controls so much of the market. At some point, it won't be enough, will it? So I don't have Nvidia on this report. I'll talk about it next report. I would not buy it going into earnings, right? I do not like to trade stocks going into earnings because I've seen double beats, which means very good earnings reports blow the stock up and shoot it downward. And I've seen double misses or partial misses just shoot it to the moon, right? It's nonsensical unless you have inside information on what they're going to talk about in forward guidance. So I would stay out of it unless you hold it long. If you hold it long, let me know in the comments below where you're at, and I'll make some suggested stop losses to protect you. But PCE is going to be the big one this week. That inflation data comes out Wednesday. That's one of the key metrics for the Fed, and it's critical for the rate path expectations, forward yields, the dollar equities, and gold. Right, so lower than expected readings would generally support metals and risk assets going up. Right, so if PCE is lower, then that would be supported, and then just the opposite is true. And we will also have the Federal Reserve Jackson Hole Economic Policy Symposium that runs Thursday through Saturday, with a key focus on Kevin Warsh's remarks. The markets will parse any signal on inflation, growth, and September policy path. So, what does that mean? They're looking for any bullishness or bearishness, hawkishness or dovishness in his comments, and that will move the market as he talks multiple days there. We have the ongoing Treasury yield fiscal dynamics and potential further buyback commentary like we had this past week. If all of a sudden an unscheduled catalyst comes out and said, yep, we're going to buy back more, that will move markets. And then, of course, the geopolitical stuff going on with US and Iran. To me, it seems like we're escalating. I think Trump needs a win here before the uh, midterms without getting political. if he doesn't change things, his party's going to get crushed in midterms, and then it's going to be a hard swing the other way in the United States. It's just been a swing from one side uh, to the other. Uh, I believe Trump's got himself in a quagmire that he can't win. It's his own fault, and we, the American people, are paying for it. Don't get me wrong. It was shitty under Biden, and it's shitty under Trump. So, to me, they're all cut from the same cloth. All right, guys, let's get into it. All right, we're going to start with the Nas, guys. So we predicted back in April that the top would be 30,000 to 31,000. We've been 100% accurate, even on when it's reapproaching. We talked about several weeks ago when this explosive run came back in. We did anticipate it seeing 26,000. It fell short of that by about 900 points. This level has not been tested. We will see it, guys. I just don't know when. It's timing. But this run was not supported by volume. As you can see, price up, volume down is divergence, which means reversal. You have to find a reversal point over top, and that's clearly the red box where I was once again accurate in that, and we fell down. Now, if you watched last week's video, you know that I said that when we turn, we'll find the all-time high anchored VWAP. That's the next support level. So as you drop, you look for support. As you climb, you look for resistance. And guys, look where we stopped. That red line, the all-time high anchored VWAP. And we're just bouncing around it. We can regain it. So prediction, we could hold this, bounce the key level, hold this, bounce the key level. That's potential. If we break that, then we bounce and the next range. So we're identifying ranges. So we break that, we're going to go down to this green line and bounce. What is that green line? That is the volume weighted average price of this run. And I want you to notice slope and angle. Look how strong the slope and angle was on the move up. And now as we're consolidating, it is running flat, right? And then once that turns down, we're going to head down. But right now, the volume weighted average price, as well as the EMAs, exponential moving averages, or moving average in general, are running sideways, which predicts range, right? So I've predicted two ranges for you. If the third lower range would be if this breaks, we got market structure where it fell before, right? And again, I think this is also going to be tested at some point. Am I saying it's going to be this coming week? No, I don't believe so. So keep an eye on that. Commiserate with that. I still have two lots purchased of buying SQQQ, which is a short of the market. So you go long in this, which shorts the market. My dollar cost average is here and I'm underwater. You can see my approximate stop loss is this dash line, and that is equivalent of NAS hitting 31,000. Again, I'm on record. I can't make this up saying that I don't think we break 31,000 unless a peace deal is brokered. So we might get a false breakthrough, but I'm talking about a closed filter hold of that level. It could run to 31,800 and then fall right back down. We need to close above 31,000. Um, there needs to be a peace deal. If we see 26,000, this is the approximate level. My trade will be up about 50 to 60%, and I'll exit there. The S&P 500, guys, has been pretty bullish. You can see this green level that we changed last week. This was the resistance identifiable for weeks, if not months. And then we broke out several weeks ago, almost a month ago, actually, a month ago. And we set a new all-time high. And once this level that is identified as resistance gets flipped, it is now identified as support, hence the color green. So on my charts, green is support. Red is resistance. And now that we have enough movement, as we did the report last week, we were at all-time highs, but now since we've dropped down, we need to set an all-time high anchored VWAP. So you go to your anchored VWAP, you click on that candle. I like to use all-time high as red, and you're going to see as price drops, this red line will provide overhead resistance as it moves down. It needs to close above that in order to re-challenge the all-time high. We could compress between the all-time high anchored VWAP and this key level, or this line here is the volume weighted average price from the run, just like identified in NAS for you, which is a decent price target down around 73,500. If we pull back, this green line used to be red. That was the first all-time high on the run, which the volume weighted average price from that will come into play because there's a strong consolidation here. One thing you're going to learn is if you look at volume at price, there's going to be the point of control within that consolidated range. Now, I knew that without looking at it. I didn't look at it before, but once you begin to see this, you know that more consolidation at price increases volume and increases the opportunity for it to be the point of control, meaning that It's the price at which had the most trading action with the most volume is in there. So that will also be support in there, guys. So in this consolidated range, so right above that, all this anchored VWAP from the run. So what you do is you average those prices. So one is telling me 73.65, the other one's telling me 7,400. So that's why you see on my charts, folks, that I make ranges. It is extremely hard. Have I hit the exact number? Absolutely. Have I missed the exact number? Barely? Absolutely. That's why I do ranges. That's why there's a range, because other analysts who work for funds see this when they're moving millions of dollars. They want to front run each other in order to get filled. You don't want to have they take these millions and millions of dollars of shares and they break them into orders. They don't want them to. They want to get the best price, so they're throwing them in at lots. And if everybody's seeing, let's say 7,500, they're going to try to get in at 7,590 to get the best price possible, but make sure they get filled. That's why you see deviations around a predicted price. The Russell 2000, we had our previous all-time high anchor VWAP, which is this red line, and then the one before that, which is the green line. So those are important. I'm going to keep those on. This was this green line was the first test into 3,000. And then this was the all-time high. And then last week, we closed at nearly an all-time high. So we need to set an all-time high anchored VWAP to this candle. And you're going to see that that's going to be resistance, just like an SPX. So we may compress here before it makes a decision. And I think 2,800 commensurate with this candle. So high 2,800s is probably the next level down. Should our green box here break, we can pull this green box off and just use these VWAPs. So if 29.85 breaks, we get a 2-day close filter below it. The natural target for that is about 100 points lower. The volume is a little steady with no directional bias in my mind. It's weaker than this sell-off. So we'll see what happens. Right now, the trend is your friend. It is moving upward. If you can't see that, I'll draw the trend line for you. There are short opportunities in all of these. The problem is on like SPX and Russell, it is stronger than the Nasdaq. Actually, I don't have it on here, but the um, industrials and the Dow Jones also is doing the same as NAS, where it's consolidating. So keep an eye on the Russ, trying to hold 29.85. If that breaks, we could see another 100 points lower this coming week. Let's get into oil. Guys, if you followed me long enough, we just don't miss on oil, do we, for the swing trades? I want to show you how many of these levels that were predicted have come true. Let me move this out. I just want to expand it. These levels have been in play and have held true since the war broke out the last weekend of February. We called the buy off of this gap. We said that you could take profit here. Okay, a lot of traders did that. We said if you miss that, you could buy on the crossing of this VWAP right here. Right? And this is that's the oil shock VWAP, right? So that was let me double check. Nope, I'm sorry, that's the all-time high anchored VWAP. And this is the war shock VWAP right there. So it ran above that. It's a buy anytime it comes down around 84.50. Remember, I talked about in the previous segment, standard deviations around that. So it's probably a 50-cent buffer either side to get in, and you can run that as TP1 to 87, 86. But once it breaks up into 90, it likes to hover between 90 and 100. So if you can buy here, let it hit 87, go break even, reduce your risk, and then as things escalate, get into this box and look to TP at 100. It's been my contention, if you've watched me long enough, that Trump does not like it when the oil goes to 100. So that is actually a pretty good selling point. But right now, it's a very strong thesis with escalation going on in the Middle East. And let me know in the comments below, have you bought on any of these signals that we've given out? Folks, the moment you've been waiting for, let's get into metals. Gold. All right. The reason why I said I wanted to focus on this, I want to go back. If this is your first time here, welcome. We identified this descending triangle had its base at 4,000 and its height about 400 to 500 points right here. And those measurements, are important because that's how you predict the movement after the breakout. So this has, on a technical analysis side, about 68% chance of breaking down. Now, full disclosure, we said that If it broke down, it should be a 400 to 500 point move, and we identified like 3,500 to 3,600 as its next leg down, which is true. However, we also said that if it broke upward, there's a 32% chance of that it's one of the strongest moves in technical analysis. And yes, it did. It moved the initial 400, and now it's moving further. you we did call the buy at 4,000, but what we asked you to do because you had a greater chance of the breakdown than the break up is to maintain reduced risk. So if you followed me, we had, a stop loss in something like this, right? So you had reduced risk in case it went against you, and then you could buy this level because we had a high conviction of a buy down here. Now, since it played out the minor percentage on this and it's running, we also gave multiple opportunities to buy at 4,400. If you follow me anywhere, I've talked about it in my reels, in my groups, you name it. You've had ample time to buy gold, even at throwbacks at 4,400 if you missed this. What are we seeing now? This red line, folks, is the all-time high anchored VWAP, and we have a one-day close above it. For those that bought this discount at 4,400, you just realized 200 points of profit. If you took profit at that level, congratulations. If you're still in it, your stop loss needs to be right where that red line is. I'd be right below, 44.90 in case there's an additional throwback. But a one-day close filter is good. If we get a second-day close filter, this is going to head upward. How do we know where it's going to head upward? You got to look to market structure because we have broken the downward market structure in this instrument, and the thesis has changed commensurate with what I said at the beginning of this video. If you're just fast forwarding to watch gold, go back and watch the very first 90 seconds and I explain it. So we look at market structure, overhead resistance at 47.75, 4,900, and then 5,000 is a key level. And you can see that in market before we see all-time highs. Everybody asks me what my price target is for end of the year. My price target is 5,000. A lot of fundamentalists have it a lot higher than that. I potentially see, a run up and a pullback, and I'm just, end of the year, it'll be somewhere in there. So we'll see. And that's conservative, guys. It could be higher than that because we're only 400 points off of. But remember, I'm looking for a throwback also after hitting some of these key levels where sellers, meaning not people who are shorting gold, but people who are taking the profit on this run, will exist. But guys, it's a time to buy gold, right? The anchored VWAP here is approximately 45.95. Holding that level, give or take 50 points, is a good way to get in and follow this continuation. You can see volume is very steady. We don't have volume up or volume down, but volume steady means cruise control. So it's just going to continue to cruise in that direction. Let me know in the comments below. Do you own gold? Have you bought it? Are you looking to buy it? How can I help? Silver, commensurate with gold, guys, that were the buy zone was 54 to 56, exact same thing I said, meaning price being 55. This was equal to gold being 4,000. It has not hit the level that I'm predicting yet, so it still has some upward mobility. That resistance field is 71 to 74. You can see that all-time high anchored VWAP is there. That's going to be its first test. If we get a close above that, that's going to be another strong buy signal. You do have a short opportunity there. Once it touches it, you can do a fast intraday or short swing on a trade there. I would just trail it down, might get $1, $2 out of it, but I would not have a wide stop loss. That is dangerous in this trend. However, I do not see it breaking its first attempt, just like we did not see gold break its all-time high anchored VWAP on its first attempt. And I'm not talking about the daily, I'm talking about intraday, right? We're going to look at it on the smaller time frames to catch this, not on necessarily a swing trade, because it could happen. The throwback could happen in a day and it reverse. Um, Always safer in this trend to buy, so you can look to buy discounts on that throwback. And that's exactly what I called here midweek for my groups. When silver was in this consolidation level, I don't like necessarily buying price in the middle of two identifiable key levels, but I said if you wanted to buy it because you missed this move that we called or you haven't participated yet, the buy at that time was in this consolidation level where you had clearly defined uh, risk at the bottom of the channel, and then you can catch the breakout, which is what it's doing now. Had a number of traders do that. Congratulations for getting in, 64, 65, 66 with defined risk as low as 62. And now you're going to realize gains and you can stay into probably 74. Silver. Do you own any? I don't own any as an instrument. I own it as a precious metal and I buy it all the time. Do you own any? Let me know in the comments. Platinum, guys, this is the story, the all-time high anchored VWAP. The metals are running to test it. You can see platinum was a buy down here around 1500, although I was waiting for the alert at 1500 to go off and it never signaled. And now its movement tells me it's going to run back up. And if you're interested in platinum, you want to watch it react off of this level. If it rejects, you go down to smaller fractals like the 1 hour or 30 minute, get yourself a discount for it to push through. And that's going to be true of most metals. And then above that, if we get a two candle close filter above that for confirmation, we got to look at market structure up around 2100. Of course, 2000 being a whole round number will provide support and resistance. You can see where this consolidation level was underneath it. And then you just start checking market structure. All right. And then you bring that into confluence with other indicators. Platinum. Copper, folks. Broken record, all-time high. I can't tell you how many times we've called this a buy and the opportunity to buy it. I said in the last video, you could buy between $6.30 and $6.40 was my identified price zone. It dropped to 6.33, right into that zone, and now you're up 20 cents, which is massive on leverage, right? And where did it stop? This all-time high anchored VWAP. It actually pierced it and then fell short. So the next signal will be once it closes above that. The first time is aggressive. The second time is the confirmation. But guys, you want to buy any throwback in this. If we throw back now to probably 640 to 45 is your opportunity to buy copper as I look for it to explode upward. Again, some fundamentalists have this at $10. It's just going to continue to run. So if you followed me and you buy copper, there's no reason why you don't own this. If you own a position, let me know in the comments. If you need help with stop loss and that type of stuff, where would I put it? All right, folks, Bitcoin. I removed it from our report for uh, many months or weeks and months because I identified this support level for everybody where it tapped and bounced and tapped and bounced. But what it did this, I called this a dead cat bounce, which it was, because what I want you to see is this bounce was definitely not supported by volume. Matter of fact, the only volume that came in later was more sell side. Now that the thesis has changed, commiserate with what I said at the opening of this video, if you just fast forward to Bitcoin, go back to the beginning of the video, watch the first 90 seconds to 2 minutes, and I explain why it's exploding. And this is the greatest volume spike we've seen since March. All right. This is pretty good. But what we see in it right now, folks, is if you weren't sitting in it, and you didn't buy it in the first couple of days of its move, I think you need to wait for this box and that all-time high anchored VWAP to be touched, rejected. We'll get a discount and then run it up. And then we have all sorts of market structure overhead as resistance. You can see identified zone here, and then critical anchor VWAPs over top. 100 is going to be a massive amount. 100,000 is going to be a massive amount of selling and resistance. So but if you get a 2-day close filter above 80,300, you can buy that and try to run it for 5,000 or greater up to 100,000. We want volume to support that. Now, one thing you want to look at, guys, is we're going to get a couple red candles in here, or the red candles that occur, as long as the volume stays lower than the sell side, that is just take profit. If volume overcomes this buy side in red candles, it's a reversal point. That's true of any instrument. So this week, we need to see how it reacts there. My groups will be on top of it. Make sure you like, subscribe, follow everywhere I'm at, because I'll be talking about it. It's time to talk about crypto again. Ethereum, same thing as Bitcoin. Nice explosion. I said stay out of it. Full disclosure, I do own a lot of Ethereum where I don't own any Bitcoin. I don't want to get into that right now, but I think Ethereum is a better product. I had alerts here, and I talked about it. I was willing to buy about another $50,000 worth down here, and now it's running. So I'm going to wait. I want to see how it reacts, and I may allocate in. You can see this consolidation down here might provide because there's volume at price point of control more than likely there if I brought it in. So, and it's tapping into that level for support. However, if you didn't buy this explosion, you have an opportunity. This red one is COVID. the COVID low. I had to go back and clarify it. All right. Let me clean up my chart since I had to zoom back. Might get a discount back down to 2000, which on the change of thesis is maybe the buy, but we need to wait to see how it rejects 2700 and how it reacts in this zone, right? If you buy it now, I think you're going to have to endure some drawdown. So this is currently resistance. And then once that is flipped and confirmed as support, then there's more buy opportunities. But I think right now, right around 2000, I'm going to set an alert for about 2070 some just to front run it with this VWAP as it comes down. Um, and I'll consider buying there. I will not allocate the same amount of money that I was going to allocate down here. I'm in discussion right now or asking for a report from one of our crypto experts on the cycle low is supposed to be predicted at the end of October. So I want to see how this affects that because I trust him in this space. I know what I'm seeing. I want to hear him because he's both a technical analyst and a fundamental expert on crypto. So when I know, you will know. All right, two that I have on the report are the ones I put out as dividend payers. Guys, this KHC has pays the dividend for holding it. Beautiful entry was 23 to 25. It tapped back into that zone last week where I told you you could get back in if you hadn't because it sold down after earnings, which is fine. It doesn't hurt our feelings. We don't mind if it runs sideways. I think this one has a 50% opportunity in KHC. Go watch any of my previous videos over the last month where I get deeper on the analysis. That's KHC. Kraft Heinz company. DRAM, if you want to try to own a piece of, lost my placard on that. So this has Micron in it, has U.S. Treasuries in it, it has uh, a ton of tech in it. If you want to own it as an ETF, DRAM, we called it a buy between 48 and 50, and now you're up 50 up to 57, so you're in the money above 10%. So congratulations, you can reduce risk. If you bought it at 48 and you want to go break even, do so. This does not pay a dividend, but the reason I bring it to the report, this was providing a great discount on an opportunity to buy a lot of individual winners in the space by only owning one instrument. So let me know, did you buy it? Are you looking to get into it? The buy zone now is probably 52 to 54 if this holds. So otherwise, I'll probably pull it off the report and set alerts and bring in something fresh that I like moving. And as always, guys, I want to thank you for following me. If you would like, subscribe, follow, but more importantly, share this out to people you think would benefit from this information. And I reduced the number of instruments on here because I want to talk about what was important, and other ones will come back, just like Bitcoin came back after a couple months. No sense boring you with the same information. If there's something you'd like, let me know in the comments below that you would like me to add, or if you're in one of my groups, I get enough requests for something, I'll throw it on the charts. But without further ado, guys, do your own due diligence. Learn this. It's the best return on investment you'll ever get. Investment in time and money. If you need help, I offer courses, I offer lessons. Reach out. Have a good rest of your weekend, guys.